Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking at this hour. Sensex and Nifty declined for the sixth day in a row, losing over 2% just this week. Over 8 lakh crore rupees in investor wealth wiped out in the last 6 sessions. All sectoral indices declined this week. After a surge during the pandemic, retail investors look beyond equities. National data shows that stock exchanges have lost 38 lakh clients in the last 6 months. Daily average turnover in February is down 38% compared to last year. Zerodha's Nitin Kamath says new users have dropped and the company is finding it hard to generate revenue. No respite for Adani stocks as the group loses over 21,000 crore rupees in market cap today. More than 12 lakh crore rupees wiped out in this month. Supreme Court refuses to gag the media from reporting on the Adani Hindenburg saga. Prime Minister Modi flags the risks to global growth due to high levels of debt in emerging economies at the G20 finance ministers meeting in Bengaluru. A tug of war erupts over the joint statement. Finance ministers of Britain and France say that the statement should not shy away from mentioning the Ukraine war and reprimanding Russia. Air India says it will be hiring over 4,200 cabin crew personnel and 900 pilots as 2023 as it expands its fleet. The announcement comes a week after the airline signed mega deals with Airbus and Boeing for 470 aircraft. National Company Law Appellate Tribunal stays the insolvency proceedings against Zee Entertainment, issues notice to IndusInd Bank, who had filed the insolvency plea. Zee argues that they were the corporate guarantor only for a tranche of interest repayment facility on Citi's debt.
It is foolish for a real estate company to only because you can't deal with all the people all India. Be where you are.
Construction tycoon KP Singh says DLF is content with sticking with Delhi NCR, says it is foolish for a real estate company to operate all across India. Also says there were no irregularities in DLF's deal with Robert Vadra, which had come under the CBI scanner during the UPA 2 tenure. Ukraine braces for possible fresh attacks as the Russian invasion completes a year. Zelensky tweets that 2023 will be the year of their victory. The United Nations General Assembly passes a resolution demanding Moscow withdraw its troops from Ukraine. China calls for a political settlement to end the war. Former MasterCard CEO and Indian-American Ajay Banga nominated by the US to lead the World Bank. US President Joe Biden says Banga is uniquely equipped to lead the bank at this critical moment. Supreme Court refuses to hear a PIL seeking menstrual leaves for female students and working women, says the matter fell within the domain of policy. CJI says that if employers were compelled to grant menstrual leave, it may disincentivize them from hiring women. The court suggests that the petitioner approach the Ministry of Women and Child Development. Well, let's start with the market action of the day. Sensex and Nifty declined for the 6th straight day, even though the losses today were limited. Nonetheless, both major indices have lost 2.5% this week, erasing all the gains made in the previous 3 weeks. All in all, nearly 8.5 lakh crore rupees of investor wealth has been wiped out in the last 6 trading sessions. Well, sticking with the markets, after a surge in retail participation during COVID, data shows investors are now looking beyond equities. National Stock Exchange has in fact lost 38 lakh clients in the last 6 months alone. Daily average turnover in February is down 38% compared to last year. Anuj Singhala joins us with more details. Anuj.
The number of retail clients with NSE, that's down 38 lakhs in the last 6 months. 38 lakh clients have actually disappeared from the NSE. They've stopped trading, and the number of NSE clients is now actually lowest in last 8 months. And this is very important. The retail or HNI share in cash market is down to 44%. This number was a mind-boggling 66%. 66% of the volume 2 years back post-COVID were getting generated from the retail and HNI. Now, this is NSE data, but I'm giving credit to a Twitter account, a digital blogger, because this guy really helped me a lot in terms of this data, and it's only fair that he gets the credit. But that's the big number. The other big number, what's happening in the cash market turnover. Just look at that. The daily average turnover, which had reached 81,235 crores in February, daily average, has now reduced to 50,384 crores, which is a drop of 38%. Now, this doesn't mean that people have lost interest in stock markets. People have lost interest in investments. But there is some interest in market overall. Look at what's happening to the options turnover. This is the index options, and we're only taking premium into account, not even the overall notional turnover. The premium, which used to be 17,485 crores in February, that's gone up to 53,562 crores, 206% growth. No wonder the SEBI is a bit worried, especially considering that 90% of F&O traders actually end up losing money. And that's why this data is very important. And now the reason for that, because from October 2021 peak, the market's not given you anything. The Nifty is down 5%, and that's not even telling you the true picture. The Nifty mid-cap is down 8.2%, and the Nifty Next 50, which is where, again, a lot of portfolios are benchmarked to, it's actually down 16%. And equities are not giving you a return. The other thing is happening. Remember, in 2021, the fixed income market was not giving you anything. The repo rate was 4%. Now repo rate has gone up to 6.5%, and it's still rising. And what fixed income is giving you is it's generating risk-free return of 7 to 8%.
Even in broking, I think I somehow feel that we've kind of hit a plateau because the new user growth has dropped. The existing users aren't really, adding more as such. So I think the big challenge is that while India is a large country, we're still a poor country. And the real problem to solve in this country is to kind of, get rich inclusively, get a lot more Indians, to a position where they can actually spend money.
Well, meanwhile, there's no respite for the Adani stocks as they continue to fall, and the group's market capitalization is now closer to 7 lakh crore rupees. Now, it's exactly 1 month since the Hindenburg report raised several red flags, and since then, the stocks have taken a beating. 7 out of the 10 group stocks ended in the red today, losing more than 21,000 crore rupees in market capitalization. The group's value currently stands at just above 7 lakh crore rupees. Since the Hindenburg report was released, it has lost more than 12 lakh crore rupees in market cap. The Supreme Court today, meanwhile, refused to gag the media from reporting on the Adani-Hindenburg saga. A bench headed by the Chief Justice of India said that it will not restrain the media. These comments were issued after Advocate M.L. Sharma mentioned his application seeking an injunction on the media from reporting on the case for listing and hearing by the Apex Court. Well, shifting focus now, emerging nations' debt vulnerabilities and the Russia-Ukraine war are expected to feature prominently on the agenda as the first key event under India's G20 presidency kicks off in the city of Bengaluru. Finance ministers and central bank governors from G20 nations and top executives of leading international financial institutions have all gathered to brainstorm on roles of multilateral development banks, climate financing and debt situation, among others. Prime Minister Narendra Modi called on the nations to address risks to global growth due to high levels of debt in emerging economies.
You represent the leadership of global finance and economy at a time when the world is facing serious economic difficulty.
Well, staying with G20, a tug of war has erupted over the text for the G20 joint statement. In fact, the finance ministers of Britain and France tell us that the statement should not shy away from mentioning the Ukraine war and reprimanding Russia. Parishad Luthra gets us more details. Parishad, this is quite a contentious issue, especially the different set of stakeholders that we have among the G20 nations. What else are you picking up?
Well, it is the anniversary, one-year anniversary of the Ukraine-Russia war, and it's very clear that there is a divide over the G20 communique or the outcome document. The G7 is pushing for strong language to condemn Russia's role in the Ukraine conflict, which has been on for 12 months now. They have said that the use of or threat of nuclear weapons is absolutely inadmissible. This era cannot be of war. The Ukraine war has caused immense human suffering and immense loss to the global economy. They have also said that there can be no departure from the Bali communique when it comes to the wording on the Ukraine-Russia war. We've got to know from sources that Russia and China have suggested or are trying to dilute the text on the Ukraine paragraphs, especially in the communication. And G7 leaders have told us here at this meeting, the negotiators from these countries have told us that any dilution from the Bali text on Ukraine will not be acceptable, and G7 will not give its go-ahead. So even yesterday, there was a late-night meeting which went on till about 1 a.m. in the night. We believe that the negotiators are still in this room inside the convention center at JW Marriott here in Bengaluru. And remember, these meetings began at 7 a.m. in the morning, and those negotiations still continue. The other contentious issues are debt restructuring and how the debt impact in countries like Zambia and Sri Lanka will be brought down. Differences over strengthening multilateral development banks as well. But coming to a consensus on the communique remains the biggest challenge for the Indian government, for the Ministry of External Affairs and the Ministry of Finance as well. Nirmala Sitharaman has hosted 10 bilateral meetings on the sidelines of this G20 meeting. India has also told us, and government sources telling us, that they will stick with the Bali text and they will not allow any dilution of the Bali text to take place whatsoever. Back to you.
Well, we are very clear that it would be a big mistake to make the text any weaker than it was at the leaders' meeting agreed in Bali, and I think it's widely understood that on the anniversary of the terrible invasion of Ukraine, that would send exactly the wrong signal. You know, I want to congratulate the government of India. I think they've done a fantastic job putting together this summit. It's obviously a very difficult international situation, and to have a G20 meeting in which you have the United States, the United Kingdom, Russia around the same table is very challenging.
We cannot water down a communiqué that has been decided by the head of states. And we cannot water down a communiqué which makes very clear that we all condemn the illegal and brutal aggression of Ukraine. I would like to quote Prime Minister Modi when he says it is not an era of war. He's fully right, and we should stick to the wise sentence of Prime Minister Modi. This is not an era of war, and it would be a mistake not to have a ceasefire, not to put that war to an end.
Well, there you have it. Diplomats from the G20 nations in a huddle. Well, you can catch all the action from the G20 summit at 9:30 p.m. right here on CNBC-TV18. Well, here's also a quick check at the other key stories that we're tracking. The National Company Law Appellate Tribunal stayed insolvency proceedings against the Zee Entertainment and issued a notice to the IndusInd Bank, who had filed the insolvency application. Zee argued that they were the corporate guarantor only for a tranche of interest repayment facility on Citi's debt. Air India says it will be hiring over 4,200 cabin crew personnel, over 900 pilots in 2023 as it expands its fleet. The announcement comes a week after the airline signed mega deals with Airbus and Boeing for 470 planes. Well, another big newsmaker this evening. KP Singh, the chairman emeritus of real estate company DLF, won the Lifetime Achievement Award at the EY Entrepreneur of the Year Awards. Singh sat down with Shireen Bhan for a candid conversation. He said that DLF is content to sticking with the Delhi NCR region and added that it is foolish for a real estate company to operate all across the country. He also said that there were no irregularities in DLF's deal with Robert Vadra, which had come under the CBI scanner during the UPA 2 tenure.
Real estate, people don't understand, is the most complicated business. Real estate is divided into two parts. One is land, purchase land and zoning it. That is the biggest, 90% problem. Once you have land, building is easy. No, you can have building carried out by. No, it is the land. The question is when you get to land, purchase an assembly to make a bigger area. All kind of characters come, mafias and all. You deal with them. Politics come. Now we in DLF decided at that time, we are best at in NCR only. So we actually expanded, and then we have, Rajiv was very smart. Within 2 years time, we thought that is not our forte. We can't deal with the political and all the people there. So he just came in, except I think Chennai and Hyderabad, a couple of people, but not all India. It is foolish for a real estate company to order, because you can't deal with all the people all India. Be where you are.
There's been many controversies over the last 70 plus years. I don't need to recount them. You're fully aware. You're fully aware of them.
No.
You know, we've had conversations about your run-ins with Bansi Lal for no fault of yours. To, of course, what happened as far as the Robert Vadra matter was concerned, where
Ask me any question.
where there are FIRs, the matter is in court, a commission was set up, etc. What have been the big learnings there as far as a real estate company operating in India within the parameters of the law, but also having run-ins with political parties, politicians? What's been the big lesson?
Big learning is, which I practiced. First, you never get involved in any business relationship with any politician. You should have politicians as your friends, well-wishers. But not, you should yourself not be in politics. I had one chance in '84 when the whole village community, that I bought the land, and the biggest success, they all came in a unanimous choice for member of parliament. So I talked to my late father-in-law. He said, "Beta, ek hi kaam nahi karna." Politics and business don't go together. So I was frankly slightly tempted, because the whole unopposed I would have been. But for what? DLF would not have come there. So I decided, no, two things will not. We will do our business with political friends, as we do with good relationship, well-wishers, but never cross the line. DLF has, I can tell you, please take it from me, we have never crossed the line of doing business against any law.
So, you know, you're saying that you've always knowingly not broken any law, but there have been instances, even when it comes back to the IPO, for instance, and there was a SEBI order, which of course then got overturned by SAT, but there was a SEBI order which barred you from accessing the capital markets, which penalized you and 6 other senior executives of the company as well. So today, as you look back, are there things now that you believe are non-negotiable? For instance, you said that there will be no dealings with politicians of any kind.
No.
So do you regret the deal done with Robert Vadra?
Not at all. This is not regret. My God, without that, DLF would have lost massive money. Please understand the business first. You got nothing to do. By the way, I've only played one day golf. I don't know the gentleman. Robert Vadra is a businessman. He's not a politician at that time, by the way. Businessman, basically they know how to make money, not how to lose. So in our business it's very easy. I must have made maybe 40, 50, 10 times millionaires than Vadra.
Well, you can catch that entire conversation with DLF's KP Singh at 10 p.m, where he opens up about his business, life, and finding romance at the age of 93. Well, with that, it's time now to slipping into a very short break, but we leave you with the visuals of the EY Entrepreneur of the Year Awards, where Sajjan Jindal won the top honor. We're back in 2 minutes.
The EY Entrepreneur of the Year 2022, Mr. Sajjan Jindal of JSW Group.
Tonight, I accept this award not just on behalf of myself, but on behalf of all the entrepreneurs who are making a difference in the world. Let us continue to innovate, to solve problems, and to create value for our customers.
EY Entrepreneur of the Year Lifetime Achievement Award winner 2022, Mr. KP Singh.
Welcome back. Now, the Supreme Court has refused to hear a PIL seeking menstrual leaves for female students and working women. The court said that the matter fell squarely within the domain of policy. That's not all. CJI Chandrachud observed that if employers were compelled to grant menstrual leaves, it may disincentivize them from hiring women at all. Archana Solanki gets us more. Archana.
Thank you, Ashmit. While dismissing a plea on menstrual leave for women, the Chief Justice of India, D.Y. Chandrachud, said, and I quote, "I agree, if you compel employers to grant menstrual leave, it may disincentivize them from hiring women," unquote. The plea filed under Article 32 sought leave for students and women employees across the country. The Supreme Court said it's a policy matter and it would be appropriate if the petitioner approached Women and Child Development Ministry. The issue of paid period leave has reignited the conversation around the world, with a recent headline coming in from Spain that became the first European country allowing for paid menstrual leave. While passing the law, Spain's equality minister said, and I quote, "No more going to work with pain. Without such rights, women are not full citizens," unquote. A large section of the society is still divided over the issue. The advocates of period leave assert that many women suffer from extreme symptoms such as heavy bleeding, severe cramping, fatigue and nausea, and that they need to rest. While the others say, in fact, they warn that such a move, far from liberating women, could prompt employers to prioritize men when hiring. So which other countries have period leaves? Indonesia, Japan, South Korea, Zambia all have these leaves. In India, recently, Kerala gave menstrual leaves to female students enrolled in colleges and universities. Bihar, too, has been given 2 days off to its women employees since 1992. Now, companies like Byju's, Zomato, Culture Magazine, and a few others have also taken similar steps. But reports suggest that women often refrain from availing such leaves for the fear of being judged. A research paper says that such a move contributes to menstrual stigma and perpetuates gender stereotypes, negatively impacting the wage gap. Back to you.
Right. The first time a person of Indian origin is likely to head the World Bank. In fact, a former CEO of MasterCard, Ajay Banga, has been nominated by the US. The 63-year-old stepped down from his role at MasterCard 2 years ago. Jagrati here profiles Ajay Banga's career path that took him from a cantonment area in Pune to one of the most coveted jobs in the world of world finance.
Meet Ajay Banga, former MasterCard CEO and potentially the first Indian origin person to lead the World Bank in the near future. US President Joe Biden nominated Banga to succeed David Malpass as the World Bank president. President Joe Biden, in a statement, said, and I quote, "Ajay Banga has critical experience in mobilizing public-private resources to tackle the most urgent challenges of our time, including climate change." For nearly 8 decades, the US president, which is the largest stakeholder in the World Bank, has picked its president, though the bank's board still needs to officially appoint Banga. Born in an army family, Banga completed his early education in Pune, pursued his undergrad in economics from St. Stephen's College, and later moved to Ahmedabad for his postgrad from the Indian Institute of Management.
Lucky to be one of those in the earlier days, but there were people before me. I once made a joke at Vibrant Gujarat in my first year that I was truly the made in India guy. I've studied in India, educated in India. I have no education overseas. I am a graduate of St. Stephen's and I am Ahmedabad, as you know. I haven't even been to an executive education program in a country overseas. I believe that that's a tribute to the quality of education I got in my growing years in India and to the kind of people I got the chance to learn from.
In an illustrious career spanning 3 decades, Banga worked in Nestle, PepsiCo and Citibank. But his stint in MasterCard as its CEO is the most remarkable one. Under Banga's leadership, MasterCard's revenue nearly tripled and market cap surged to more than 15 times. Kill cash became his motto.
The Ajay Banga example from MasterCard is one of my favorites. He came in 2011. By the way, MasterCard was $17 billion in market cap when he took it over. When he stepped down, it was north of $300 billion in market cap. So quite the journey.
Speaking to CNBC-TV18 in 2020, Banga shared his vision on regulating global finance.
During the financial crisis 10 years back, the global world created something called the FSB, the Financial Stability Board, which helped governments around the world figure out the rules around financial services to ensure that there wasn't arbitrage across markets. Maybe we need something like this for AI, privacy, digital taxation, the digital world, data, that whole space, something like a data and technology board.
In 2016, Banga was awarded the Padma Shri by then-President late Pranab Mukherjee, which is the fourth highest civilian award in India. The World Bank presidency will be another feather in his cap. In Mumbai with Jagruti Potpore, Shilpa Rani Peta.
Well, that's all the time that we have for. With that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates continue right here on CNBC TV18.